Hello everyone. India's economy has surpassed UK's economy, and India will be in the top 3 economies in the world in the next 10 to 15 years. This is what our Finance Minister Nirmala Sitharaman has stated last week. Also, IMF has predicted that India would be the fastest growing economies in the world, and Julius Baer, a Swiss banking company, has also said that India's earnings, the companies that are going to report earnings in India, that earnings will compound at a 15% rate in the next 2 years. Now, why is this all happening? It's also because of the formalization that's happening in India. Now, all the unorganized sectors which are there, government is trying to formalize them and trying to make them more organized, which also means that GST rates are going to go up. Overall, the revenue of India, tax collection GST is going to go higher, and also overall the contribution of India towards the world market is going to significantly increase, and also market capitalization is going to increase much higher in the coming years. Now, if all this growth is to come in the next few years, in the next 10 to 15 years, if India is going to go so strong, then there's going to be some few companies in the organized space which are going to do very well in the next few years. And that's what we're going to discuss today. A few companies from the organized spaces, especially in markets, where it's disorganized, where it's being more organized. We're going to talk about 4 companies from these sectors. One is from the realty space, which is very unorganized, and a few organized players are taking market share, and one company from the cement space as well, and another company is what we're going to discuss. So total 4 companies, and let's take a look at them in today's video. And don't forget to stay till end of this video because it's going to be really interesting, and these could be multi-baggers in the next 3 to 5 years if these companies do well going forward. So before that, let's take a look at Nifty. What has Nifty done in the last week? And then we'll jump into the companies for this week. So Nifty actually has done really well. It has closed above a very major support zone, resistance zone this week, which was 18,100 levels, which I spoke about a couple of weeks back. And this was completely backed by the entire rally in the global markets, followed by a lesser inflation report in the US. Dollar has weakened. Dollar has broken a key support zone, and we have closed beautifully on the weekly charts on Nifty. So if you see here, I have weekly charts, and we had a strong trend in the last 4 weeks, and the trend is really strong. Now, while markets are extended in the short term, I don't see a change in trend anytime soon in Nifty or in the global markets, and we might continue to head higher in the next few months or so. So overall, the level that you have to be really cautious of is the 18,800 levels here, which is a major support zone, and we should not break below that, and we should not break the support channel. Now, if we break these levels, then we're probably going to head lower. Okay, so that's the overall Nifty outlook. I still continue to be bullish on India and Indian markets. Let's take a look at the 4 stocks. So we're going to start off with first company, which is a cement company. This is a very small cap cement company, Heidelberg Cement, and it has really good numbers in terms of overall ROC, ROE, and PE. It's kind of occasionally valued. In fact, all cement companies have been consolidating for some time, and I think this company can do well going forward. So taking a look at the charts. So today I'm not going to discuss about fundamentals because all these companies are very well known, and even the sectors are very well known. Okay, so let's take a look at the fundamentals here. Now, Heidelberg Cement monthly chart, if you see here, we had a breakout somewhere back in 2014-15, a nice horizontal breakout, and then we had a clear uptrend until now. But what's happened in the last few months is that Heidelberg Cement has actually retested the zone here, which is a primary trendline support. And now I think we are heading higher, and the test is done. We've had some amazing volumes coming in the last few months, and now we should eventually head higher because the trendline retest is done. And usually after trendline retest, the company's price share should start heading higher from here. Okay, so given that the company, the price has also been in a clean uptrend, we've still not broken the entire higher lows on the monthly chart. So overall, the stock is also in an uptrend, and we should head high from here. So zooming into this area over here, just to show you what's happening on the weekly charts, we've had a strong, kind of inverted head and shoulders pattern over here with volumes really coming in the last few weeks. So if you see, we're literally going sideways, but the volumes have been huge, and we've had this downtrend breakout as well. So overall, there is some resistance around the levels of 215, but if you can take out that resistance and if you can head higher, then we're going to see some good returns and probably towards all-time high in the next year or so. So you can buy the stock at current market price of 205. Keep a stop loss of 180, which is around 12.2%. We're going to look for targets of 350, which is 5.8 times risk that we're taking. So with stop loss 12.2%, we're going to look at at least 60 to 70% returns in the next couple of years or so in cement space. Now there are other cement stocks also looking good. In fact, you can take any of the cement stocks which are doing well, and you can buy them and probably also form a you could form a portfolio of cement stocks, 2 to 3 stocks, and try to see which one is good and try to take a call and have it in a portfolio. So that's the first stock for today. The second stock is going to be Hindustan Copper. I know that brings a lot of smiles on your face. In fact, metal space has not done well in the last 1 year since dollar started strengthening and started heading higher. But I feel that the entire metal space has made a bottom, a significant bottom, and we should head higher from here. Now, I don't want to discuss the metal index itself, but stocks like Tata Steel, SAIL, JSW Steel, all of these stocks could do well going forward. But I'm going to take Hindustan Copper because I see a good risk reward in this stock, and the stock can do well going forward. So it's a mid-cap company around 10,000 crores, decent ROC, ROE, and PE as well. Overall, the dollar strength has kept these metal companies in a downtrend, but since dollar has started weakening, I see that the stocks can do well going forward. So taking a look at the weekly chart here, so we had this massive breakout somewhere in November 2020, and then we had this clean move up, and then we had this nice sideways consolidation. Now, this is yes a downtrend, but also a nice sideways consolidation. It didn't just crack down just like that. It's a normal regular consolidation is what I feel. And since this trend line was supported here, and we had the wick, if you see this nice wicks around this support zone over here, and that gives me confidence that this stock might head higher from here. Also, in the last 6 weeks, this price has been consolidating, and I feel we've already broken out from this flag here, and we can head higher from the current levels. So the reason I'm recommending Hindustan Copper today is because of the dollar strength reducing, and we've seen a strong downtrend in dollar. Now, in case dollar starts moving higher in the next couple of months or so, you need to be cautious. So keep your stops in metal stocks. It's very volatile, and you have to keep your stops. Okay, so I recommend that. So zooming into the zone over here, if you see, we've had this nice cup and handle kind of formation we're forming. So this is the cup, and then we might have a handle here, and we might head higher once we close above 125 on a daily basis. And once we close above that zone, I see a new trend emerging in Hindustan Copper, and we might head higher. So you can buy the stock at current market price, which is 114. Keep a stop loss of 100, which is around 14 points at 12%. And we'll look for targets of 230, which is a little above the recent all-time highs that we did last year. And we can see a good 8 times risk reward, around 100% returns from the current levels. So that's the second stock from metal space. Now the next two stocks we're going to discuss is from the realty space. Now, as I said, realty itself is a very heavy cash heavy business, and some stocks have not done well, but these two stocks are one of the leaders in the realty space, and they have some of the key markets in India, and they're very focused and very aggressive in terms of their sales in the recent past, and the annual reports also show the same. So we're going to look at Godrej Properties, which is the first stock, which is kind of a mid-cap, in fact, a large cap stock also you could call it, 35,000 crores. And it's also in the F&O space. You might also take F&O trade if you're interested in F&O. Okay, so don't take too much of leverage. Keep your leverage in control and do well. So I don't want to discuss more into the fundamentals, but let's take a look at the charts. Now, we had this nice breakout here again, 2017 odd, and then Godrej Properties has been in a good uptrend. And now we had a breakout back in 2020, 2021, right? And after that breakout, we've had a nice clean move, but then we faced resistance around the channel middle, and we kind of retested this level again. Now look at that green candle, monthly candle that we had, right? Now that green candle is the first sign that the stock is consolidating, and we've had nice 5-6 months of consolidation from the zone, and I feel that we are taking support around a major support zone, which was the previous breakout zone as well. And we're also near the trend line support, so the stock might do well going forward. You could also take a good cash position in the stock, keep a stop loss, and take a trade. So looking at zooming into the weekly charts here, so this is that zone where we're talking about the retest zone here, and again a beautiful breakout here and then a retest here, right? We also did a retest here and we took off, but then the completely stock has retested now. Now this is a downward trend line here, and if we can kind of break out from the zone, then we can head higher again in the immediate future. So also observe the volume surge that we had last week. We had some crazy move, down move and up move in the last few days. And I see a trend change above 1530. Above 1530, the stock can do really well. But we're going to enter the stock early. So buy the stock at current market price, which is 1290. I'm going to give a stop loss of 1120 or 13% stop loss. I'm going to look for targets of 2500 in this stock. Now that gives us a 7 times risk reward in the stock, and it can be one of the leaders in the realty space in the coming weeks and months going forward. So that's the first talk from the reality space. Do let me know in the comments how you like my analysis, whether you love my analysis, and whether you're looking forward to it each and every week. But also don't forget to subscribe and like my channel, like the videos in my channel, and don't forget to share with your friends. Okay, so the second stock we're going to look at today from the reality space is DLF. Now, DLF, yes, is a very big company, large cap, decent company in terms of sales and growth and etc. It had its own problems in the last many years, but the stock has given a major trend change if you look at the monthly charts. Now, the major trend change happened last year when you had this breakout from a huge inverted head and shoulders pattern, and we had a crazy move up, and then we had almost a 14 months consolidation, and we retested this trend line support also here. right? So the trend is still up. We are taking support around this trend line here. So overall, the trend is up, and I feel the trend might continue in DLF in the coming weeks and months going forward. So this is a zoomed in chart of the weekly. So we see a nice, beautiful textbook channel here, taking support around the trend line here multiple times. Also the upper end of the channel, and we have this nice rectangle consolidation here. So overall, if you break out above this zone of 408, 410 levels, then the trend can resume, and the stock might again head higher from here. Okay, so you buy the stock at current market price, which is 400 levels. We're going to keep a stop loss of 15%, which is one of the highest stop losses in today's video, which comes to around 340 levels. And we're going to look for targets of 680, which is almost 80 to 90% returns from the current levels, which is four and a half times the risk reward that we're taking. Okay, so these are the 4 stocks I want to discuss today and give you some investment picks. But if you do have any questions on how do you do technical analysis, how do you find such setups, do let me know in the comments. Do tag me on Twitter and let me know. I will answer and respond to each and every question that you have. Okay, I'll leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye-bye.